Business on the programme. Stephen's here. He's going to start in China today. The government lowering its expectations there for the economy, Stephen.
Yeah, that's right. Beijing has set a new target of around 7% for economic growth this year, down from 7.5% last year. That's after growth missed its target in China for the first time since 1998. Now, there have been plenty of signs that growth in the world's second largest economy has been slowing down in recent months. Premier Li Keqiang warning that they wouldn't be embarking on more economic stimulus to combat lower growth. Instead, he said, there'd be a focus on reforms.
The downward pressure on China's economy is intensifying. Deep-seated problems in the country's economic development are becoming more obvious. The difficulties we're facing this year could be even bigger than last year. At the same time, our country's development is still in a period of important strategic opportunities where we can accomplish a lot. There is enormous potential, resiliency and room to manoeuvre.
Well, let's take a look at how the markets are reacting to that. And we've seen Chinese shares fall in the wake of that announcement from the Chinese government. You can see the Shanghai Composite and the Hang Seng in Hong Kong both down over 1% there. Slight gains, though, on the Nikkei in Tokyo, whereas the Kospi in Seoul is trading just flat. Of course, investors will be looking ahead to the meeting of the European Central Bank, which is taking place in Cyprus later. We're expecting to get more details on the bond buying or quantitative easing stimulus programme that was announced by Mario Draghi last month. And for more on that, we're joined in studio by Naeem Aslam, who's the Chief Market Analyst at Avatrade. Naeem, thank you for joining us, as always, on ECB days. But we're going to start first with the question about China. We were just hearing about this new target for China. Should we be surprised that they're going for lower growth in 2015?
Thanks for having me. Well, no, because the economic data wasn't really roaring out to us that, okay, it's going very strong and it's hefty. So it was pretty much expected. So if you are surprised by the news today, so obviously you were not priced in for the market. So what we have to adjust our expectation is that the double-digit growth in China is we're not going to see that growth any further. So because the economy is restructuring itself. So we are moving from from export to consumption. So this is going to be the new norm for China.
Is this easily achievable for them, that shift towards consumption? Does that mean it's going to be easily done?
Absolutely, Stephen. I always say it's better to promise less and deliver more, because that's the way to go forward. A lot of companies will say, okay, we're going to under-promise and we're going to deliver more, and it works. And I think this is the best way for a People Bank of China to manage the expectations.
Okay, so much to talk about today. Let's turn to that European Central Bank meeting as well. What are we expecting, do you think, from Mario Draghi today?
I think he's going to walk with the pride of a lion, with the Eurozone economic data playing violin at the back. Or I think the French expression for that one would be "Cela fait plaisir à entendre," if less the expression. But in general, if you look at the economic data, it is absolutely coming on the stronger end. And this is when they actually announced the ECB QE coming up. So they haven't even actually initiated the ECB QE, and the data has already turned up. So today, don't expect any bold movement or any headline printing coming out of this meeting. ECB will stay pat on the path. They wanted to see how the QE is going to impact the market, and they will take further matters from there.
Of course, we've seen some impact already. The euro's fallen to this near 11-year low against the dollar. Are we going to, do you think, see is inflation going to pick up as a result? What are you expecting to be the next effects we're going to see of QE?
I think the next impact of that one is going to be the growth, because we have three things. We have falling euro, we have falling oil prices, and the third one is inflation. So these three things makes a big equation for the Eurozone economy. It's going to grow higher, because if your cost for producing a product is lower, that means you are competitive on the market. And this is one of the biggest obstacles for the US right now, because dollar is very strong against euro. So it gives us edge, the people in the Eurozone, to produce and to our exports become a lot more attractive. This is going to revive the growth in the Eurozone.
Growth for some, but what about outlier countries? Like, is Greece going to see any benefit from this, do you think?
I think Greece is going to have some headlines out today, because they have muddled through the toughest negotiation. And if I may add, the finance minister is really something. Like, he knows how to talk his way out of all the mess, whatever he is. But unless they do stick to reform, I think hopes are very less for Greece.
Okay. With that, Naeem Aslam from Avatrade, thank you for joining us as always on France 24.
Thank you.
An optimistic business interview. It makes a change at the moment, doesn't it? Here in France next, let's go the other way, shall we? Some new figures on unemployment.
Yeah, that's right. Just very briefly, we've got the quarterly unemployment rate for the last 3 months of 2014. It's up slightly. It's gone up to 10.4%. It was expected to only be it was only 10.3% the previous 3 months. So things getting a little bit worse. That's, of course, contrary to the position we saw from the last monthly figures where unemployment was coming down. But no great change is the short answer.
Stephen, thanks very much. That's Stephen with Business.